if I want to invest just in general, like reach out to somebody who's a professional in that field, and don't just do it by yourself. Lean on these people, these professionals, and ask them questions and have them guide you. There's obviously, you can't 100% mitigate risk completely, but I think there's a difference between you doing something on your own, hoping for the best, versus making a calculated decision and taking a calculated risk.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Matthew Weber. Matthew's been working with Alpha Funding since 2016. He started as a business development manager and was promoted to chief revenue officer in 2020. Like I said, Matthew, before we started, I really like to let you tell your story. So I'll stop there on the bio. I do want to say thank you. Thanks for coming on the show, taking the time out today. I really do appreciate it. And I'm excited to hear your story. So let's start with that.
Yeah, absolutely. So I'll start with where I am right now. Currently, I'm one of the partners and owners of Alpha Funding. We're a real estate finance company. We're a hard money lender. So we lend to real estate investors throughout the country. Whether you're just doing light renovations, you're building a home, new construction, or if you're buying a rental property, you're renovating, and then you're going to rent it out. We lend to real estate investors. I started off actually as a personal trainer. So connecting those dots, that's where the fun is. I got into real estate 8 years ago. And when I look back 8 years ago, it's quite a journey because I had no idea in the moment. I was personal training at the time. I'd wake up every morning around 4:30, 5 o'clock in the morning. I knew what my schedule was. I knew I was going to train my 5 or 6 clients every day. And I would go to the gym, and I never knew that my world was going to be turned upside down, but for the better. And I had this amazing guy who came into my life. He was a member at my club, and he would talk to me in the mornings. And he's like, I want to introduce you to this guy who was actually one of my partners, David Hansel. And Alpha Funding has been around since 2007. So Mark and David, my two partners, started it off out of necessity. Back when the housing crash in 07 started, there was really no hard money lenders at the time because most of the hard money lenders that were out there decided to just close up shop, or they were just in an extreme sense of contraction where they just weren't lending money at the time. So my partner, Mark, who was an appraiser, always a real estate entrepreneurial guy, he also had a title company. He started lending his own money to other colleagues, friends of his, because he has a very large network, and they would, proceed to finance some of these transactions. And he made so much money. He made 14% and 4 on a single transaction. So I don't know, are like your viewers, are they real estate based, or is this just, generally anybody? Yeah. So like 14 and 4, that is incredible. The rate of return on that, like you can't get that in the stock market. You can't get that anywhere. So he started doing this and he ran out of money. And then that's when he partnered up with my other partner, David, and David put some of his money in. But really when it really started to grow was when they started to raise capital with high net worth investors. I came in about 8 years ago when we were in another growth phase. And David, he has 2 beautiful daughters. They're now in high school now, which is crazy because I remember when I started with the company, there were these 2 little girls that would come to the office, and Dave was going out every night to all these networking events, and he was looking for another him. So he had reached out to Roger, who is the gentleman who introduced me to David. And luckily, 8 years later, I had no prior real estate experience. It was very uncomfortable for the first year or 2. And then once I figured out the game and understood how it works, and then I was able to be myself authentically, genuinely, and I was able to build relationships and also just be myself. And then that was where over the last 5 years, I've really skyrocketed. I became a partner at Alpha Funding, but my journey from being a personal trainer and having that background, loving people, caring about people, wanting to coach them and help them, I carry a lot of that with me in real estate today.
Yeah, it's I find a lot of times, for myself and guests on the podcast, that maybe the past career doesn't necessarily look like it fits in real estate. Like, they don't, on paper you wouldn't be like, personal trainer, real estate, lender, whatever it is. But at the end of the day, like, a lot of the skills do end up translating, and if your goal is to help people, then that is pretty universal across most most successful service type industries. Um, when you kind of got into this and you were lending, so that 8 years ago, you were beyond sort of what we saw around 2002, 2007, 2008, but then there have been some significant market shifts in the last 8 years. We had sort of things run up to the pandemic in 2020, then basically craziness since then. But did you? I feel like your perspective is very interesting based on the timing of kind of when you got into it, because you were saying that you started the company because essentially hard money lenders had closed up shop. That sort of happened twice in the last 4 years. Like the lending has had significant shifts right when the pandemic initially hit, and then again in like mid 2022 when rates started to go up. So, I mean,
Yeah.
tell us a little bit about kind of that journey for you through the time periods.
Wow. So yeah, what I would say is the one thing that I will compliment, praise my team to the end of the world is that we are resilient. We have grit, and I talk about grit all the time with our team. We went through some tough times in 2020. During the COVID years, we also went through a new ownership. My two partners at the time had met with two other gentlemen who had another group out of the Northeast. And everyone is always like, we could talk about this for the podcast, just like taking chances. Sometimes when you take chances, you want good things to happen, but they don't always happen. And my partners, they went in with good intentions, but it did not work. And during that time, we had to completely unwind our company. There was so much that I could talk about with just the transition of going into this new ownership group, and then what happened after the ownership group basically dissolved and we had to unwind it. And at the exact same time, everything contracted. The world basically halted in March of 2020. So it's been a crazy journey. So during those years, and also during 2022 when the interest rates went up, we've always been relationship based, and that's what's always made us successful. Is that you look at our book and you look at our portfolio of the investors that we work with. I'm very proud to say, and this is kind of like with my personal training where I draw parallels, is that like I used to have 80-90% retention with my personal training clients. For every 10 people I'd work out with, I'd keep probably 8 or 9 of them, and they would be become very long-term clients that I'd work with. And I've seen that with Alpha, and also myself, bringing myself into Alpha, I've carried that as well, where we're generally a shop that works with the same group of people. We've worked with a lot of investors for the last 10 years, 15 years. And during 2020 and during 2022, if it wasn't for that, if it wasn't for the fact that we had such good relationships, I don't know if we would be, still here today. I probably would be maybe back personal training, or maybe I would have opened up a gym. I don't know what I would be doing. But yeah, 2022 was a big struggle because in those 3 or 4 months when the Fed rate started to rate, or when the Fed raised the Fed rate over those 3 or 4 months, we saw loan volume really slow. Like the rental DSCR loan programs that are out there, that non-QM loan product. So when an investor buys a property, they renovate it, and then they put a tenant in place, and then they want to refinance out of our short-term bridge loan. then they don't traditionally go to a bank, because the bank, it's pretty rigorous, and also just the traditional loan process, it's not conducive for an investor. So over the last 5 years, this non-QM product has come out from the private equity side, where basically private equity said, if there's this property, real estate is such an amazing asset class. If there's a property where the rental income is going to far exceed what the expenses would be for the property, which is your interest payment, your the mortgage, the taxes, the insurance, and why not? Let's give a mortgage to a decent credit-worthy borrower, and if they have some liquidity for a few months, let's give them a loan. And that market completely dried up during that 2022 period. So I've seen a big change over the last 2 years with just the rental DSCR market. In 2020, the bridge, like the fix and flip new construction, that was a huge shift in 2020, because most of the lenders that came into the space during 2012 to 2020, everybody got in. It was kind of like the gold rush for hard money lending. Everyone was doing well in real estate. Every lender wanted to get a piece of it. They wanted to jump in, become a hard money lender, because there were so many deals and everyone was doing well. And if you got into a fix and flip, even if even if the margins were thin, you would sell it and it would far exceed whatever your asking price was. So everyone was winning. The lenders were winning, the investors were winning. And what I saw was everyone, it was kind of like a race to the bottom between 2015 to 2020. And you saw rates in the single digits on a hard money loan. And there were groups that were giving out loans with no origination fee. They just wanted to be a part of it. They just wanted to take a small little piece with a little fee, and then they would just keep, churning and burning with transactions. But in 2020, as soon as COVID hit, the whole game changed. Like, I don't know if you were in that like 18, 19, 20 year, but like you could get like 100% financing. An investor could walk off the street to a hard money lender, say, I want 100% financing, and we'd have a legitimate conversation, because we had to, because that was the only way for us to continue to lend, was every other lender was doing it. If you were a new investor, there was 90 and 100. When I first started, I never could imagine what it was like when I first started. I mean, looking back now and reflecting, it's pretty interesting. We would have new investors starting with 10% down at 90% of the purchase price we would fund, and then they would only have to bring 10% down. Now, after 2020, you cannot get financing for like a fix and flip. One, it has to be a light rehab. Another thing is you probably have to bring about 20 to 30% into the deal from the purchase price. So we're only going to cover about 70 to 80%. And there was a point in those 3 months right during COVID where you had to show bank statements for seasoned funds. Like, you had to show that you had the money for 3 straight months. Most people don't come up with the cash for a deal until like the week before the closing. They get the money together, they put it in the bank account, and then they bring those funds to closing. So there was some craziness. Like, you had to show a minimum of 3 deals experience in the last 3 years, and you had to show basically proof that you've done it. It was a very crazy time on the bridge and new construction side. Leverages came down, but what I've seen over the last 4 years is things have started to stabilize. But what you see now is that some of those things that happened during 2020 have started to continue. Like, a new investor does have to bring skin in the game into a deal. And we're never going to go back to a new investor where they're bringing 10% down. We have experienced investors right now, people that have done 5, 10, 15 deals, still are bringing about 10 to 15% down. And that's if the deal makes sense. So, there's definitely been a lot of changes, effects from these things from 2020, and then also when the Fed raised the rates in 2022.
Yeah. It's been a real roller coaster. I mean, it was, a lot of people talk about, 2008 as this, it was obviously a significant time in the economy and real estate, but it was, I actually think, less of a roller coaster than what the last, 4 or 5 years have been, in the sense that it was a big crash, and it caused a lot of hurt, but like, it crashed and then slowly came up, and then it really became, as you said, like everybody was making money because the market just kept improving, and everybody wanted in. And then, when COVID hit, for a few months anyway, most everybody thought, oh, this is it. Like, this is going to cause the crash. And it didn't.
Yeah.
There was a bunch of money printed. We had, skyrocketing inflation. So then it was like, a low, then a really high, and then the rates go up, and now, kind of bring everything to a screeching halt. And it's like I think that this period, not necessarily harder or easier than 2008, but it's certainly different in terms of what has happened with the market. And also, I think one thing that people don't necessarily think about is social media and the access to information. That what we had in 2008 is very, very different than what we have right now. So like, something happens and 15 seconds later, hundreds of millions of people know that it happened. And so it becomes very reactionary. And I think that the one problem I see is that the Fed and, people that make these decisions, they're still living in, I don't know, the 1900s in terms of the ways that these problems get solved. And so it's kind of I'm not an economist, that this is what I see as in from a logic standpoint, but it seems very, very, it's a very, very challenging time to combine, sort of the antiquated systems that exist in part of this process with, modern day technology and access to information. And so it just like, that's why I was really interested in your perspective as a lender. When things get crazy, just kind of stop lending. Like, that seems to be, I'm on the other side, the person trying to get loans to buy real estate. You see, when things get crazy, it's like, oh, we're just not going to do this anymore right now. And so it's definitely interesting. But one thing I think, and I'd love to hear what you think about this. One thing is maybe people forget sometimes that aren't in real estate, like lenders, you want to lend and need to lend effectively to stay in business. Like, that's how you make money, by lending money, right? It's like,
Yeah.
so as the investor, when these hard times come and nobody wants to lend, or the criteria have changed, like you said, you have different um, different leverages, or more proof required. Like, what does it look like from your end? I mean, and I think what I've experienced is there's people that are sort of forward facing, that help investors get into the loans, and then there's like usually someone that's kind of behind them making the decision on whether or not that loan is actually going to happen. Can you talk a little bit about that process, and maybe like specifically what it looks like for you and Alpha Capital?
Yeah. So the first thing is I want to unpack. There's a lot of stuff that you went off and spoke about. The first thing you spoke about was just like the Fed rate. I think a lot of people are waiting for this quarter, maybe a half a point reduction in the Fed rate in 2024, and then they think in 2025 there's going to be a bunch of rate reductions. Everyone, I feel like so many people, they're always waiting for something to help fix their situation instead of just being in the moment and fixing their situation themselves. And they're waiting for something external to make their situation better. Even if there's a quarter point reduction in the Fed rate in 2024, it's not going to change the real estate market. People are like, yeah, well, quarter point reduction, there's going to be a giant party. Everyone's going to be running out of the streets and they're going to list their houses and people are going to start buying houses. It's not going to change. We're here in the 6% range. 6 to 7% is totally normal. If we do get into the fives, which is I think where we will eventually settle in 2025, beautiful. But even 5%, 6%, is there really that much of a difference? I don't think it's going to make a substantial difference for most people. But if you are looking to buy real estate now, or if you're looking to buy real estate in a year from now, I don't think the rate environment is going to have a huge impact, but people believe it will. The next thing that you were talking about was like looking at risk on our side and how we make decisions, and also how our relationship with the investor, like we have truly a symbiotic relationship.
Mhm.
You're an investor and we're working with you. People think that we're like this antithesis of like what we do in the transaction. Like you're the good guy, we're the bad guy, like in those
Right.
movies.
Right.
We're not the bad guy. Like as a lender, yes, are there sometimes predatory lenders? Are there some lenders that do things ethically, morally, maybe outside of the shade of gray? There are. But generally speaking, we want to work with you, because if there's a good outcome, if you have a good experience, that's exactly how we grew in 2008 to now to 2020. We're about to get into 2025. It's been almost 20 years of us doing things the right way. We want to lend money on projects because, like you said, that's the only way. Like we don't actually collect anything up front on any of our loans. There are some lenders that, like, if you're looking at a scenario with them, they will ask you to pay something up front, like an application fee, or if you're working with like a broker, they'll want you to kind of make like a deposit, and then they'll credit it back when the loan closes, because they're like, my time is money. Yes.
Yep.
I'm a big believer in investing in relationships. So before you take something, I want to give something. And I believe there's a lot of people out there that do the reverse. They take before they give. And we're definitely not that at Alpha Funding. So that's what allowed us to grow over the years, is that we always are looking to figure out solutions for, if you have a loan and there's a problem with it, we want to figure it out. Because ultimately, if the loan doesn't close, we don't continue to lend. And if we can't continue to lend, I can't pay my team. We can't continue to keep the lights on, pay the bills.
Right.
But ultimately, there is a distinction between the investor and us, because as the lender, I think sometimes we're the level-headed, the non-emotional one in the transaction.
Mm-hmm.
Emotion plays a big part in everything in life. And when you make an emotional decision, you're not using logic. Usually you're heightened emotionally. So for us, especially with our capital, like we have our own capital. So Alpha, something that makes us special is that we've always lent out our own hard-earned money on projects. Now, we're not billionaires or, multi millionaires. So like there's only a certain amount of money in the bucket, in the that we can lend out, but we also do have other capital that we pool together, and then we also have other capital sources that we work with on their behalf. Ultimately, the risk has to make sense, and the whole goal with all these different markets is making sure that in each market, are we making sure that we're making a good credit decision, a good risk investment in that deal. And sometimes the investor doesn't look at it that way. They just want to get the deal. They're emotionally invested. That would be the one thing that I think is a little bit different from our relationship when the investor and the lender are working together. We have to ultimately make sure that the risk makes sense, but there's always opportunity in every market.
Yeah. Yeah. I love what you said about, people are waiting around for an interest. Like you can't, I mean, a part of it is like, it seems like no one really knows what's going to happen, right? Like it's funny to me that they keep putting all these, projections of what, that the Fed's going to reduce rates in September and, but like the reality is unless they drop the rates by 2% or something, like you said, like a quarter point's not going to make any difference really to anybody. Like if they came out and they're like, we're going to drop it 2%, that's probably going to cause a big, but again, like, that's the problem, is like the overreactions to things, and you said interest rates in the 5 and 6% is historically normal, and where we were at was historically abnormal, being so low, and then the rapid increase in rates was also abnormal. So it's like it's just reaction upon reaction, and I think you almost have to separate yourself from that in the way that you think about it, and look at, okay, can I, how do I make deals happen? How do I manage the deals that I currently have in this environment? And you said that the lending is relationship based, and I think people investors and their lenders versus someone who's buying like their personal home and their
Hmm.
lender, it's a pretty different, oftentimes a pretty different relationship. Like what I know now about lending versus 10 years ago buying a house, like a very different approach to it. But like most people, when they're buying their own personal house, they're going probably to the bank they already use, if it's Chase or Bank of America or whatever, and like, can I get a mortgage? Or they're going to a broker and like, this is what you get. When you get into like investment or real estate investment and lender relationships, there's the ability to have more of a back and forth and be creative and kind of find ways, because again, like I said, like you want to lend money, that's your business model. You, oh by the way, are the biggest investor in whatever deal that is. Like even if
Hmm.
someone, even like when we syndicate apartment complexes, it doesn't matter how many investors I have. Most often, the the lender is going to be by far the biggest investor in the deal, and so it's just kind of thinking about that from a different perspective and recognizing the importance of relationships, as you said. Do you you guys do residential only, or do you do any commercial lending as well? What's
Yeah,
your criteria?
back during 2018 to 2020, there was a big commercial boom on the small to medium balance commercial stuff, whether it's multifamily, small apartment buildings, or mixed use. We were lending a lot. Currently, that market has really slowed.
Mhm.
Hopefully, that picks up, but just the uncertainty of the commercial market. Right now, we've always been a residential 1 to 4 unit lender for single family, multifamily up to 4, 2, 3, 4 family. But that's always what we've been lending.
Great. Um, this is I'm gonna ask this because it's one of your talking points, and I'm actually very curious about the answer to this. You have in here how to leverage credit cards to buy real estate with no money, and I think that's uh, I'm definitely interested what your take is on that, but I also think it opens up maybe a bigger topic on risk tolerance, I guess, if you will. So, let
Mm-hmm.
Matthew, tell me a little bit about kind of your thoughts on that. Is that something you advocate for? Like, what's your idea behind that?
Yeah. So before we even talk about deals with no money and MB Alpha, you have to understand everything. Like even if you were going to go into a hard money loan, you're going to buy an investment property, you're going to fix it and flip it. You have to know the risk associated with getting involved in something like that. If you're going to be raising money, if you're going to be borrowing money from a hard money lender, you need to understand the risk and the responsibility that's associated with that. Um, a couple years ago, we've always worked with this group, MB Capital Solutions, and their national group. They've always helped investors acquire working capital, access to working capital for whether it's just business needs or real estate. If you're going to invest in real estate, typically there's costs outside of, the major, like you said, in a syndication, in a hard money loan. You're still going to have to bring some money into the project, or you're going to have to, and you're going to have to bring closing costs, interest payments. So that additional working capital that's necessary, we've always wanted to solve for that. Whether or not somebody doesn't have the money to be able to do a deal, like a lot of newer investors, one of the biggest things that I find a newer investor doesn't want to get into real estate is because they don't believe they have enough money to get into the
Right.
project. And then a lot of seasoned investors, the big thing I hear is that they have deals available, but they just have all their money is already accounted for and they're already invested in other projects. And
Mhm.
they just don't have that additional cash sitting in their pocket to get into a new
Yeah.
project. Well, what if we could solve for that? If we could take that additional working capital, add it into what we offer, and basically effectively give people 100% financing solutions, and then allow them to continuously use this on an ongoing basis. And it's not too good to be true. But what you were saying is just understanding risk tolerance. When you're not putting your own money into an investment, sometimes people treat it differently. Um, I actually had an investor who the opposite of what we're going to talk about is when you don't put your money into things, you may not treat it with the same severity or the same care. But actually, for this one investor that we worked with, she was on my podcast, the Mike and Matt Show. Tam, when she borrows money from private investors, she said she takes more care of that money than she does her own, because she's like, those people put their hard-earned money into my deals, and that could be their life savings. I am not going to let them down. But that's one person and how people look at it. The general mass is that if you're going to treat other people's money differently than you treat your own money. And that's where, like, to go back to the fundamental thing you were talking about, is understanding, is there a way to use 100% other people's money? Yes. But also you have to be very thoughtful and very responsible with that type of, with that type of money and that capital for these types of projects.
Yeah. Yeah. And then I think that's investing in general. That's the key, right? Like you have to understand that you can and very likely will lose on an investment deal at some point, whether that's in real estate or in stocks or whatever. Like you'll eventually likely have something that it loses value. Now, there are, like we talked about earlier, you mentioned this, like there are ways to mitigate that, right? You don't lose any money if you don't sell, but you have to understand the risk that you're taking on. And if you go into a deal and you have, 90% covered by your hard money lender, and then you pay for everything else on credit cards in the meantime, if you make money, your business plan comes together, maybe the market helps you, great, no problem. But if you do something like that and now we have a market shift like we've had up and down, and it goes down, now that money still has to get paid back somehow, right? So it's kind of like recognizing, what kind of level of risk are you putting yourself in? What kind of, if you're, as you mentioned, if you're taking on other people's money, what kind of risk are you putting them into? I agree with, you said her name was Tam. Like, to me, I'm better about other people's money. Like it's more valuable to me than my own money. So I think to me, that's how you should approach it if you have investors in your deals. So it's just, it kind of stood out to me, and I wanted to kind of get your take. But I think the most important thing is just understanding your own risk tolerance, and don't want to over leverage yourself, put your last dollar into a deal. It's then you're getting really kind of living on that edge of easy to have a big problem. But
yeah, what I would also
go ahead.
But yeah, what I was also going to say is, I think what's really, really important to any of your listeners is make sure you have good people around you. If you're going to just invest in general, anything in life, have good people around you. I am a personal trainer. I reached out recently over the last couple of years to one of my colleagues who is a great personal trainer and coach, and he's helping me. If I'm investing in something, if I'm investing in a stock, or if I want to invest just in general, like, reach out to somebody who's a professional in that field, and don't just do it by yourself. Lean on these people, these professionals, and ask them questions and have them guide you. There's obviously, you can't 100% mitigate risk completely, but I think there's a difference between you doing something on your own, hoping for the best, versus making a calculated decision and taking a calculated risk on an investment or whatever the decision is. If you are going to use, these unsecured lines of credit, the group that we work with, they're going to guide you every step of the way. When they start it, they're going to let you know, these are the rules of engagement. This is what happens if you acquire these lines. When do you have to pay them back? What are the negatives? What happens if you don't pay them back? How could this affect you? They walk you through it. They also check in with you every quarter and every year, just to make sure that you're using them thoughtfully and responsibly. We're also checking in with you as the hard money lender, with your draws, with your loan, with your process, making sure that you're okay. So that kind of will help you. The big thing is always make sure you have just good people around you, and it will make things a lot better and a lot easier. And also, when you do make those, leaps of faith or those calculated risks, you're not going to feel as nervous because, it's just like if you were my financial advisor and I have a certain amount of money and we're saying, what would make a really good investment for me? And we both decide, we put our heads together and we decide that we're going to use these dollars for this investment. And based on your data, that this is a good investment. Well, that's a whole lot different versus me going on the internet and typing up, where are the best places to invest my money and just hoping for the best.
Yeah, no, I completely agree. I think that the point about having the team around you, having someone to guide you, is really well said, and ultimately I think that the best mentors, whether that's coaches, trainers, advisors, whatever you want to group them all within mentors, the best mentors have had their own mentors and advisors and continue. So it's like people, because it's it's just sometimes hard to recognize. You might be able to have all the best kind of advice for someone else, but sometimes it's a little bit hard to be self-aware enough to do that to yourself. And so that's where having the right people around you makes such a huge difference in success, just in general, in any kind of avenue that you might follow. Matthew, I want to switch gears. I want to ask you the questions I ask every guest before we get to run out of time. But the first question is, of course, based on the name of the show. I like to ask everyone, what is your why? What's driving you? We talked a little bit about why I named the show this before we started recording. So now it's my turn to ask you, what is your why?
My why is trying to help as many people as I possibly can, even if it was one person. And I've always had this mindset that if I could positively influence one person in my life and they could have a better life, and I go through my entire life cycle and this person comes up to me at the very end and said, you made a massive impact on me, that makes it all worth it. I want to help as many possible people. But my big why is really just making sure that that I'm leaving a lasting impact. Also, chasing my potential. So, like, I think a lot of people, I've heard this and I love it. I'm chasing every single day when I wake up. 10 years from now, 5 years from now, I want to make sure that when I get to that point, that the person that I meet is someone that I'm happy with, and then I'm happy that I've met that person. So, my why is just chasing my future potential, helping as many people as I can. And, for me, providing for my family. I don't have a family currently, but, I see that you're a dad. You told me you have 2 kids, and, being able to provide for them and give them the best possible life like that, it lights me up inside. I see my brothers who have kids now. My one brother now is having his second. Family is really, really special. And, waking up every day and being able to provide for them, that's definitely a big why for me. Jason?
I must have muted myself. Sorry about that. Tell us something about yourself that isn't common knowledge, a special skill, a hobby, anything to let listeners know you a little bit better.
I love my dream. If I could have a dream job, it would be working as a groundskeeper for the New York Yankees. I love landscaping. I love taking care of baseball fields. I grew up when I was in my like teenage years. I used to take care of the local little league field and just cutting grass, manicuring a field, making it look beautiful. It brings me so much happiness. It's a great outlet for me. So something that I enjoy is like landscaping, doing all those things, and that would be my my dream job if I could ever have one.
I am always amazed by like how nice a field looks, like like a baseball field, any sort of like professional. Honestly, I think baseball probably does the best job. Most all of the parks like just look so nice. Game day before the game even starts, you get to a stadium and it's like they just look so good. Like it's really a pretty impressive skill. And obviously, shout out to any landscapers in general. Like the making a lawn, a yard, look and feel good and a home is actually quite a cool skill to have. So that's pretty interesting, though. You probably could, I don't know, maybe arrange some, sort of groundskeeper for a day type of thing. Maybe
Yeah,
they do.
yeah, yeah.
Maybe they do
Like with
promotions like that.
like with the Yankees, I think they have the fantasy camp where you can be a Yankee for a week. If
Yeah,
they had like a groundskeeper fantasy camp,
yeah. There
that
we
would be the best week of my life.
go. So you gotta have kids. Put them in the Yankees fantasy camp, and then you, as dad, you go there and be like, "Hey, I would love to mow the lawn or whatever. Just be a
Yeah,
part
yeah,
of it in some way. That's where you can set that up in the future."
yeah.
um, when people hear this and they want to reach out to you, what's the best way to get in touch?
Yeah, reach out to us at alphafunding.com. So it's www.alphafunding.com. You can email us at info@alphafunding.com, and you can reach out to me. My phone number is 973-943-2195, and you can reach out to me with any questions. I am here as a service to you. So if there's any questions, don't ever feel like anything is a bad question or a stupid question. And we have an incredible team. So if you ever have questions, reach out to us and we're here for you.
Awesome. Love it. We'll put all that stuff in the show notes. Thank you so much, Matthew, for coming on the show today. Appreciate all that you shared. Really enjoyed the conversation. So thank you very much.
Thank you.
And folks listening, I know you're going to love this episode. Please connect with Matthew and please like, rate, and review the show so we can get more great guests. Thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?